So good morning, everybody, and thank you for joining us today for our interim results. Before I start, I just wanted to introduce myself, John Mills, and I'm here with Ian Tickey as our CFO and Graham Tweedale, who is our General Manager of the Printhead business. Before we start, I just wanted to let you know that we're very excited to share with you what I think are a great set of results, given the difficult times Xaar has had over recent years and also obviously against the backdrop of COVID-19. So I wanted to share with you a little bit of my background. I've been in inkjet since starting my career with Domino in 1994, and I followed Xaar for the last 25 years. And I've always loved the technology, but I've always been aware of its challenges. Before I joined Xaar, I was CEO of Ink Digital, a large OEM selling digital machines globally. And at Inca, I bought heads from many of Xaar's main competitors. And during that time, I have to say that I would not have bought Xaar printheads for a number of technical and commercial reasons. But despite this, I was really excited when I joined Xaar because I've always believed in the potential of the technology. If we could remove some of the technical and commercial barriers, we would have a really winning product. And in the presentation today, I want to share with you how we're going to remove these barriers to adoption and the impacts that it's had and will have. So having completed my first year, I'm even more excited about the opportunity. I'm even more convinced about the potential that we have within Xaar, as we have really great technology, great people, and a large market opportunity. So we will be successful. So just moving on to the business highlights. After a difficult restructure and closure of our thin film program at the end of 2019, we've made excellent progress in implementing a new strategy across the business units. Our new go-to-market strategy and product roadmap are seen as to attract a number of new customers and re-engage with old ones. But we need to be able to grab the attention of the customers who may have dismissed Xaar in the past, a little like I did in my previous company, to show them that what we have and why we're new and why we're different. So to help this, we've built a new corporate identity that you will see through the presentation. But I wanted to reassure you that we haven't blown the budget on a remarketing project. Ian will talk you through the financial results, but I'm delighted with the progress we're making toward our medium-term objective of returning Xaar to profitable growth. And before Ian starts, I just wanted to kind of cover with you our response to COVID-19. Firstly, I wanted to say thank you to all of our employees. Their flexibility, loyalty, and hard work has been truly inspiring. And without them, we would not be in such a strong position today. As a result of their hard work, we've been able to support our customers throughout the pandemic, not only in terms of product shipment, but also in innovative ways to support them remotely. We're also very proud we've been able to play a small part in helping local hospitals by donating PPE to the NHS during the early stages of the pandemic when there were shortages. And we're confident going forward that we can continue to operate effectively and support our customers whilst following the guidance and doing everything we can to protect our employees. And with that, I'll hand over to Ian, who'll take you through the financial results.
Thanks, John. So firstly, looking at our group financial performance summary. So you'll see on the financial slides, I've included a reference to the H2 2019 performance, as it provides a useful context given the various moving parts that flowed through the numbers in 2019. So for the first half, we've reported revenue at 23.7 million, which is in line with our expectations, and we are happy with this performance overall. Although down on H1 last year, it is in line with H2, and that's encouraging and indicates how we've been able to stabilize our revenue flows, particularly in the printhead business. Gross margin is 27%, which is in line with H1 last year, and 6 points higher than H2, which again is pleasing and reflects some of the positive actions we have taken in the year. We're also able to report positive EBITDA in both our printhead and EPS businesses. This is a significant step towards returning the business to profitability, which of course is a key aim. As you might expect, we've been very focused on cash preservation and are able to report positive cash inflow from our continuing operations. And this also takes into consideration our continued investment in R&D and our 3D business, more of which we'll share later. This good performance has come from a tight control on spend and a diligent, methodical approach to working capital. It enables us to continue to still invest appropriately and judiciously. Accordingly, we have got a robust platform, critically a very strong balance sheet, and this will enable us to build and invest further. So moving to revenue, Printhead revenue has grown 13% in comparison to H2 of last year. And this growth has been driven in our core sectors of ceramics and coding and marking. And that's pleasing and reflects the return of some of our previous customers that we'd lost. Also pleasingly, this is built around primarily in Europe and Asia, and that represents around 80% of our Printhead business. For EPS, there's a slightly different picture. Overall, we have grown 5% in comparison to H1 last year. However, the pandemic has hit our analog pad printing sales. They tend to be delivered on a shorter order time frame, and as a result, we've seen a reduction of just around $2 million in comparison to H2 of last year. So moving to look at some granularity by our individual business units. Firstly, the good progress in Printhead, where along with the revenue growth, we have grown our margin to 23%, 7 points higher than H2 last year, and in fact 1 point higher than the full year of 2019. This has largely come from the greater efficiencies in our operations and reflects our controlled approach to managing orders, lead times, and inventory management, which are now based on customer demand. We have closely managed OPEX, controlling discretionary spend across the business, and at the same time maintained our commitment to R&D, spending £2 million in Printhead, as we have refocused our spend on the core Printhead development. Accordingly, it's good news to report positive EBITDA for the first half. Moving to EPS, a good performance in margin improvement. We have grown the margin to 35%, which is a significant improvement on 2019. This is particularly pleasing as it's a direct result of our change in approach and establishing a modular strategy and standardizing some of our product offering, more of which John will talk about later. Good cost control has seen OPEX remain flat year on year and contributes to positive EBITDA for the EPS business. For Xaar 3D, whilst we have had some logistical delays in testing due to the pandemic, the program remains on track and our commitment to the program remains. We've spent just over £3 million in line with H2 last year and in line with our plan. Critically, we have generated positive operational cash flow in the business, which, given the exit from last year into this year and the wider difficulties in the environment, really reflects a positive impact of the changes we have made. Driven by positive EBITDA in both Printhead and EPS and a strong working capital focus, we've been able to maintain our investment in 3D, and with limited but focused investment elsewhere, we have generated £2.3 million in operational cash flow. Including this is a US government payment protection loan for our EPS business of $1 million. We expect this loan to be forgiven in the coming weeks. Looking ahead for the remainder of the year, we still believe there is some room for further working capital improvements, although not on the scale of H1. And offsetting this positive cash flow performance, we have settled some existing legacy liabilities relating to thin film from last year. So in summary, although we are not providing guidance given the current and increased certainty, there are some key points to stress. Our revenue is in line with expectations. We have exhibited strong cost control and a focus on cash management, delivering positive EBITDA in Printhead and EPS. We have a strong balance sheet, which gives us a robust platform that will enable us to deliver growth. And I'll return back to John.
For those of you who followed Xaar, you'll know it's been a challenging few years. When I joined, as I said, I was hugely excited about the opportunity, and I was delighted to find on arrival that we had such a passionate and committed world-class team of people. And it's clear that the product had significant customer values. There were also technologies that were part developed but not exploited that would further strengthen our product offering. And outside of Printhead, a great business in EPS with strong growth potential and a high value JV with Stratasys. So a lot of real positives in the business. However, there are also a number of issues that needed to be addressed. Xaar's reputation had been damaged by the withdrawal of 5601 and other products. Customers told us that they did not know where Xaar was going technically or commercially. And many thought that Xaar's bulk technology was at the end of its useful life. So add this to the fact that customers found us difficult to work with, and it was clear we needed to make some changes. So what have we done over the last 12 months? Well, firstly, we've implemented a very clear business model that's built for partnerships. Secondly, we've developed a new product roadmap based on a new Imaginex platform. And thirdly, we're launching today a new corporate identity that's going to help us communicate these changes to our customers. So firstly, I'd like to take you through our new business model and route to market. So built for partnerships, Xaar will sell printheads that it's designed, developed, and manufactured, will not sell any third-party printheads. We've identified two clear customer types, OEMs, which have historically been at the heart of our business, and user-developer integrators who are a new customer who are actually wanting to adopt digital within their business. And Xaar will not sell through any competing channel against our customer base. We've also found that customers are more interested in systems that help them get to market. So vertically integrating is going to be part of what we will be able to offer our customer base. Our primary markets are in North America, Europe, Israel, China, Korea, and the Middle East. And whilst we recognize that business is global, we really need to be able to focus on these territories to provide full support for our customers. We have invested over £60 million in R&D over the last 5 years, and this has generated a significant portfolio from three sources. Firstly, the thin film program. Secondly, acquiring third-party IP. And finally, from development of our bulk technology during that period. These three pillars of IP have given us our Imaginex platform that will power the next generation of products. We've also implemented a new corporate identity. Externally, we really need to grab the attention of people who may have thought they knew who Xaar was and maybe have dismissed us. We wanted to make them take a new look and give them a reason to talk to us, because we're finding that if we can start the conversation, people are getting excited about what we have to tell them. Internally, it's given employees clarity of who we are and how we're going to go about things. So over 80% of the company were directly involved in the process of the corporate new identity. And it's really brought everybody together behind a common goal.
Just imagine if you could print a plane, or the echoing hallways of a palace. Just imagine getting fluids down to a fine art to make your work one of a kind. Just imagine distilling 3 decades of expertise into every printhead and unleashing the true power of inkjet in your industry. At Xaar, we're working with customers around the world so that together we can push the boundaries of what's possible and deliver the next generation of inkjet technology with our new Imaginex platform. You asked us for the precision to make big ideas beautiful, down to the smallest detail. So we're taking resolution up to 1440 dpi. You asked us for the flexibility to make anything you dream a possibility. So we're giving you applications that work with every fluid, including aqueous. And you asked us to help you react at lightning speed to match the pace of modern life. So we're supercharging our frequency to 150,000 drops per second. With a revolutionary new range of products that will help us transform entire industries in 2 dimensions or 3. Together, we can unleash the power of inkjet and create a world where if you can imagine it, you can print it. Welcome to your new Xaar.
This video will be translated into the language of each of our customers, along with the presentation, to help us build relationships in a time when face-to-face meetings are not possible. So, moving on to each individual business unit. In the Printhead business, we've talked a little bit already, but there were some significant business model challenges. So what we've done is we've simplified how we do business and focused on delivering value for our customers. We've stopped selling through distribution, and we've established clear global pricing. And we've created a value-added proposition for our customers, which is all around how we help them get to market more quickly. And we have communicated our vision and our roadmap to our customers, and all of this is starting to rebuild confidence in Xaar and Xaar's products, both internally and externally. Xaar's technology has fundamental benefits over our competition. We can print very challenging fluids, wide viscosity range, and high pigment loading. We can print effectively in multiple orientations, and we have a very wide operating window. In ceramics and glass, I believe we have the best products on the market, as the inks in these markets are very challenging. In glass, we have a number of key OEMs who have adopted our technology over the last 12 months. In ceramics, the change in business model has seen us start to regain market share with customers that we've previously lost. In coding and marking, we have a very strong offering for secondary packaging, where the ability to print in multiple orientations is a real strength. The area where we've seen the strongest growth is in the advanced manufacturing area. Companies who have recognized that digital print offers them advantages in their business are coming to Xaar, as we have the printhead with the widest operating window. However, there are some roadblocks to adoption in certain markets, which is the reason I said at the start that I didn't buy Xaar at my previous company. In wide format graphics, customers have moved to a more robust nozzle plate technology, such as stainless steel, silicon, and others. To compete in this market, Xaar needs to move to a more robust nozzle plate technology. We also need to improve our speeds and resolution. In packaging and textiles, these areas are dominated by water-based inks, and Xaar's bulk technology has not been able to print water-based inks. And without this capability, we are excluded from the market. So in my previous job, we rejected Xaar heads as they didn't have a robust nozzle plate and they were not water compatible. So our goal is to develop a range of products that are very competitive across all market sectors. So we need to make our products work with water-based inks. We need to move to a more robust nozzle plate. We need to increase speed, we need to increase resolution, and increase the operating temperature, which will expand further the range of printable materials. If we can remove these technical barriers to adoption, then I believe the inherent strength of our technology will give us a compelling proposition in all markets. I'd now like to introduce our Imaginex platform. We now have a number of development programs in place which will deliver a new range of products. But what's really exciting is that we have a significant head start for a number of these, given the level of investment in R&D over the last 10 years. Technology developed during our thin film program, along with bulk technology developed over the same period, and technology recently acquired, has given us the Imaginex platform that allow us to accelerate our development timescales. As you can see, we recently launched our 2002 product, which incorporates the plug-and-play features as well as high laydown and high viscosity. Water-compatible heads and higher speed heads are now being tested, and we're actively looking for beta partners for those products. We're introducing silicon nozzle plates across our product range in a phased approach over the next 1 to 3 years. And there's real excitement with our customers about the prospect of a 3 times increase in frequency and high resolution printing. This roadmap is gaining real traction with our OEMs, who now have a clear visibility of where we're taking the technology and why we are the right long-term partner. So in summary, we're incredibly fortunate as we have a world-class manufacturing facility that's producing a high quality, reliable product. These facilities are well invested with a large capacity, which will allow us to grow without the need to add significant fixed cost. This should deliver strong bottom line growth as revenues increase. Establishing a business model built for partnerships and a clear product roadmap based on our Imaginex platform has resulted in positive growth in revenue from new and existing OEMs. This is why we're excited about the future of the Printhead business. So let's move on to EPS. So EPS design, develop and manufacture bespoke systems that are integrated into our customer production lines. They have a great reputation for a high quality, reliable product, but their consistent top line growth has not been matched by growth in the bottom line. This is mainly due to the fact that each project is bespoke, and it's very difficult to actually maintain margins when each project is so unique. So what we have done is to introduce a modular approach to ensure that our R&D effort can be leveraged against multiple projects. This modular strategy is starting to pay off. We now have 2 core products that are at the heart of more than 80% of digital print projects. As a result, we have now improved how we quote, and the increased project efficiency has led to increased margins. We have now defined core products which can be exploited more easily in adjacent markets. And also the team is now focused on securing aftermarket revenue to build an annuity revenue stream. So EPS and Xaar, the future. EPS have seen multiple projects pushed out until 2021, leading to a more challenging second half. But we are pleased that the improved margins and cost control have improved profitability. We can now see also that EPS fits clearly into the Xaar organization. Now we've identified UDIs as a key customer base. As a result, we'll see a closer working relationship with EPS, where their products form a key part of the Xaar vertical integration strategy. We're currently working together on a number of opportunities for full print engine and full systems. And finally, moving on to our 3D business. As you may be aware, Stratasys have taken a 45% stake in our 3D business and have an option to acquire the remaining 55% within a 3-year period, starting from when the agreement was signed in October 2019. We're really pleased with the progress we're making in the JV with Stratasys. And our goal this year is to ship product to Stratasys to start beta trials. And despite some COVID-19 related logistical issues, we're very pleased with our progress. Finally, I want to take you through our key achievements. So as Ian mentioned earlier, we have a positive EBITDA in both Printhead and EPS. We built a stable business platform from which we can expand further. We've launched Imaginex platform, which has really given us engagement with a new set of customers. And we're very pleased with the progress in EPS with the margin improvement, given the business model changes we've made. And we're delighted with the strong relationship with Stratasys, which we believe will keep the Xaar 3D project on schedule. And all of this is wrapped up in a new corporate identity, which we'll hope will connect with people and start a new series of relationships. And finally, the outlook. The key priorities for 2020 are really to continue to stabilize the business to give us a solid platform on which we can grow. We're expecting neutral cash flow in 2020, excluding 3D. And it's really important that we ensure that Xaar 3D executes on the product strategy. In the medium term, we have ambitions to grow, but we need to make sure that we have a philosophy of setting achievable goals and focus on delivery. But we also believe that as we grow, with our well-invested facilities, that the increase in the top line will see a strong growth in the bottom line. And this all will help us return to profitability in 2022. And there are further upsides. The product roadmap is very exciting. And if we can actually deliver on the Imaginex platform and deliver new products, we see some real potential for significant upside growth. And all of this is enabled by us being more flexible and easier to work with, which is going to make it easier for customers to engage with Xaar in the future. So coming back to where we started, I hope now you can see why I'm so excited about Xaar and the potential in the future, because we really do have great technology, great people, a huge market, and together we will be successful. Thank you very much. And now we'll open it to Q&A.